through some of the technical analysis and what to look for in this market that remains volatile, of course, as we look at inflation and how central banks globally are trying to fight it. Alan Nuckman from Bull Eyes Option joining us now live. Alan, very good to catch up with you. I'm interested to get your point of view then, just as far as the macro picture is concerned. We know just how high inflation is at the moment. I guess in the States, it's a question of whether it's peaked. Certainly, monetary policy continues to move in an upward direction. What's your assessment of where we're at? And I guess as a result, what we should be doing as an investor?
Well, I'm a price guy, and so I'm looking at the price action. It looks like we finally bottomed out, and last week we consolidated. Now let's see if we can get above the midpoint of this drop in the S&P to show some renewed buying. That's a good start. But I want to remind you, in the big picture, it's been 5 months since the all-time forever highs. We're off about 14% or so in the S&P from that top. But we were up 25% last year, and we were 100% off that COVID low. So we can look at this as a profit-taking pullback. I'm still an optimist. I still look at the main drivers, which are earnings growth and revenues and margins, and those are all holding up very, very well for corporations, and that's what truly drives the stock market.
All right. So those technical levels you're looking for then at the moment, I mean, it's certainly the question more broadly is whether inflation has peaked, and therefore, I guess looking at monetary policy, certainly in the States, beyond June and July, which is a given, but for most, but perhaps looking for a pause in September. What levels are you looking for?
Well, the S&P, it's very important to get above this 4,200. We've been trading here between the 3,800 low in the S&P and 4,600 was a recent high. So the midpoint is 4,200. So that's a good second step. But what we did see was an oversold market that had 4 super lows, and each time it made new lows, it did so on lower volume, and it did so with a lower VIX. So there's less volatility now. We're at 25 or so than there's been on all these preceding lows. That's bullish divergence is very positive. I'm a price guy. I'm not going to get into whether I think inflation's peaked or how many times the Fed's going to hike. That's often prices. You look at the Fed funds rate, and if you look out to the futures in the Eurodollar, you can see that the Fed's going to raise rates, and by the end of 2023, we're going to be around 3% for short-term rates. We've actually seen yields in the 10-year note come down 0.5% from its highs here recently. So the markets have very much moved forward and digested this. And as far as inflation goes, I look at it as reflation. We're using 2020 numbers as the baseline, and if you adjust crude prices for inflation, the 2008 highs would have to hit $200 a barrel here in the States, and we're at 120 right now. So we're a long ways away from being just where we were even.
Okay, so just as far as investment strategy is concerned, what do you need to consider at this point? I notice from your note you're saying that essentially perhaps, buying puts, well, you've missed the opportunity.
Right. And you've got to use psychology. Most people right now are overly negative and pessimistic, and they are talking themselves into, as was your last guest, about a recession. Okay, to see the markets, the main problem in America is we've got too many jobs, too few people to fill them, and therefore wages have gone up dramatically. So that's not really a terrible economic situation to be in. And now people have money and they're spending it. That's what's caused these prices to move higher. No one was complaining when their house values jumped 20% last year. So, it is what it is, but you have to have some perspective. And I think that's what people are lacking. And for those people that get overly nervous, you don't want to be buying puts or getting short the market after a 15 or 20% sell-off. So let's see what the next step is in the market. I like to sit back and let the market tell me. And that's why I'm looking to see if we can push to that 4,200 in the S&P in the next couple of weeks. And if we can't, then we might get another roll downward. But I like the way things are set up. And you've got to remember, over the last 2 decades, each and every crisis, the markets have overcome and made new all-time forever highs each and every time.
Alan, have you got an eye on historical data at this point, or is that not factored in, given perhaps the playbook is different this time, given that incredible amount of stimulus we've just seen?
Well, again, you'd have to think that it is different this time, and I don't think it's different this time. The markets have had periodic sell-offs. We've had time after time again, issues, Brexit, you had the China issues, you had flash crash, you've had, COVID, and each and every time the markets overcome those hurdles. Interest rates are rising, and you talked about in your last segment, that for some people, that all of a sudden is an issue. I mean, who didn't see that interest rates have to rise eventually because they were at zero? So they have to go up. Anybody that didn't recognize that shouldn't, has more investing questions than answers. So that was foreseen. We were at all-time forever lows. Rates are still ridiculously low. So yes, they bounce off the bottom, but I'm not in the camp of super negative. Again, I think from a risk-reward standpoint, I think there are some good buys. Again, a confirmation for me would be a push above that 4,200, 4,300 level in the S&P. It wasn't so long ago that we were within 5% of the top just a couple of months ago. So, I still don't think that it's different this time. Maybe it is, and I will wait for the markets to tell me that.
Okay, so you're looking through that negativity. You're looking past those troughs then. What other strategies do we need to consider at this point?
Well, I'm an options trader, and I'm a simple options trader. I use options instead of buying or selling shares of stock because I can control more variables. And I do basic stock substitution where I'm buying an in-the-money option as opposed to buying or selling the stock. You tie up less money, you've got less risk, and you've got greater payoff and just modest moves. So I'm looking at options right now for October, December, and January. So I'm looking to see how these markets sort this out. There's a lot of stocks that have dropped extreme amounts that I think offer some value at some point. So, that's how I'm positioning for the longer term. I think tech is set up for the best rebound. Again, I'm positioning myself for if and when that happens. But then I want to see how the markets react. It's not as important as how they have reacted. It's how they react now that we've got a little bit of a bottom base in place.